Once again, the recent situation with the banking sector, guys, is just the iceberg of things, tip of the iceberg, okay? I'm going to try to attempt to draw a interest rate curve going back 14 years ago. So you would probably know, it would not even look like this. It would be more, it was a more of an even rate cut, rate slide type situation going back to 2007, 2008, and that wouldn't even do it justice. Okay, so more even, and where Federal Reserve completely just lost its mind, as pointed out in many videos, okay, lately. It's this part right here. Okay, so for 14 years, they've been slashing rates plus minus evenly. The market needs to be balanced to function properly. So when you've been cutting rates for 14 years, from 2008 all the way to 2022, and then you decide basically to go from zero right here, let's call it a point of 0 or 0.25, you decide to increase the rates within the short amount of time to the magnitude of 20x, right? This is literally how interest rates went from nothing to close to 5%. That's a 20x move, okay, within less than 12 months, in comparison to 14 years of gradual slides in interest rate to the point to where we get them pretty close to 0, 1, 2%. They stay there for years, and then within 10 months, Federal Reserve just wakes the fuck up and says, oh shit, all this money, all this stimulus we've been printing, oh my God, we think we got a fucking problem. No shit. So you go 20x on interest rates. Of course it's going to create turbulence in the market. Okay, a 5-year-old can fucking understand this. Okay, so Federal Reserve is out of credibility. Okay, it cannot get in control of this market because Federal Reserve is in a complete checkmate. Because at this point, the root of all evil, okay, it's not whether the Federal Reserve is bankrupt, which they are, okay? The only way they can get themselves out of this is by printing money. Well, printing money is not going to be a solution. The root of all evil at this point is the collapse of the U.S. banking system because of this core issue. USD will collapse. It doesn't matter how much money they're going to print. That's only going to make US dollar collapse much faster. So use this as your base. United States dollar buying power will drop. That is a fact. So all these regional banks that are having issues, okay, on a day where, you know, it looks like last couple of days, well, no, the market is fine, everything is fine. Those are the days you got to be very cautiously preparing yourself for a much bigger drop here in the markets. It's those low volume days where the market is going higher. It is exact setup that we're looking for here at 30 Market Moves to initiate an entry on a huge short. So it's pointed out in multiple videos, okay, slight moves in the market higher or even bigger bounces higher, if they occur on low volume, okay, they are to be shorted. All the bounces in the current market situation, they are gifts to you as a short seller. So when the market is doing this, okay, you come in and use this opportunity to short it, despite of how complacent things look. I mean, we went through a major scare a couple of weeks ago with, Silicon Valley Bank. Guys, it's only been a couple of weeks ago. We're yet to find out all these other banks that are going to have similar major issues. The domino effect, we haven't seen any part of this domino effect yet. So you use the bounces to short the market. Okay, the Fed is fucked. That is a fact. Okay, people are already using all kinds of currencies for trade, which has never happened in the last 50 years. Okay. Dollar has been the preferred method for exchanging goods and services all over the world. And so the more and more countries, they're dumping dollar. They're dumping dollar at the speed that we have never seen before. So if you use this as a base case, everything we've pointed out in the last few videos is absolutely true, okay? Fed, zero credibility. It doesn't matter if the next meeting it raises, it cuts rates. It doesn't matter what they do. The only outcome of this, if they're going to say, hey, we'll guarantee everybody, these bailout economy, guys, is only sustainable by printing more money. Printing more money equates to United States dollar losing value at more of a rapid pace than we have ever seen before. And yet, when we look at the dollar chart, let's glance at it, it's still at the very early innings of a major drop. So anytime you have major disbalances in the market, like Federal raising interest rates 20x, which has never happened in the last, and actually has never happened in the history of the Fed. Some people compare this interest rate rises to Paul Volcker back in the 80s, but this guy Paul Volcker never raised interest rate 20x. I mean, he went from interest rates of maybe 9-10% to 17-18%. From 9-10 to 17-18%. I mean, it's nowhere as bad in terms of rate of change, right? It's the rate of change within a short amount of time that puts the market at disbalance. Okay, so when you go in the 80s from 9-10% to 17-18%, I mean, that's like doubling the interest rates roughly. Okay, when you go from a quarter point to 5%, I mean, that's 20 times the rate of change within a very short amount of time. The math, we're yet to see the aftermath of all of this. So don't be surprised if many regional banks will be completely out of business. Guys, this is just the beginning, is all I'm trying to tell you. This is a beginning of a major dollar collapse. Use this as your base case this year. You will beat the markets. It's easy. Beating the market this year, it's fucking easy. So if you're not sure exactly how does this translate into your trading strategy, okay, I'll be a reason for you to schedule a call here at 13 Market Moves and trade this huge opportunity with a coach, because they're easy 5 to 10 different trades that you can utilize this explanation and put together here in the next couple of weeks. They could go 10, 20, 30x. Some of these trades that are based on this simple explanation, that are based on this approximate drawing of what actually has happened. So when Federal Reserve goes out and it says, well, or a bunch of people, they go and they blame Silicon Valley Bank, right, saying that, well, it's their fault. Well, it's not Silicon Valley Bank's fault. It's not the fault of all these regional banks that Federal Reserve fucking lost their fucking mind and they went 20x on the rate of change. On the rock, they go 20x. You go 20x rate of change on interest rates. Yeah, there's going to be some fucking consequences, okay? And so this is very basic explanation of why the aftermath is, we're barely touching the tip of the iceberg here, guys. So trade this huge opportunity this year with us. I mean, dollar, let's look at this chart right now. Okay, so here it is. Here's your chart, weekly chart of US dollar, guys. Got major head and shoulder formation. Here's your shoulder 1, here's your head, here's your shoulder 2. Oftentimes, this will result in a 10 to 30% drop within, not within a day, but within a year. It's possible. So we're talking about a drop possibly well below 90 level here. If dollar drops to like anywhere in the 70 handle, I mean, there may be no Federal Reserve anymore. I mean, because we could have an inflation at that point in double digits. Double-digit inflation. United States could get to a point in the next 2 years where you could have fucking triple-digit inflation. I mean, it's going to be a total fucking collapse. So, I mean, just imagine that is actually absolutely scary for anyone, including those in the United States and outside of the United States, because that's going to impact everything. But this is a major head and shoulder formation, which can run sharply lower at any point over the course of the next few months. At any point over the course of the next 12 months, we can get some sharp moves in the dollar to the downside. That's going to decrease everyone's purchasing power. That is the reason why it doesn't matter whether the Fed stops the rate hikes, cuts them, increases them, okay? This ball has been launched in motion for a while. It's been going on since 1972. So you try to figure this puzzle out, guys. Actually, it's not even a puzzle. I mean, there's nothing to figure out here. Fucking US dollar is going to dump. It's going to drop. It's going to collapse. The only thing we don't know is how sharp the moves are going to be. Because if we go back to the rate picture that I've drawn for you, I mean, it could look similar, right? Because there's no sharp moves besides this like red candle. But can you imagine seeing a few of these red candles back to back on the chart of USD? I mean, this could shake the entire financial system. Everything that you know now, the way you know, could be a memory at that point. I mean, we could see some really, really serious stuff happening. And the fact that nobody is even scared of this happening, nobody is even worried about it on Wall Street, even gives it such a much greater probability. A 30% drop in the dollar puts us at 72 on this chart, and it's gonna be a fucking disaster. Now, when you look at the daily, it's not so bad, right? I mean, it's just because you don't see any sharp, abrupt moves. But imagine these red candles back to back with huge magnitude to where you're going from, 102 to 99 in one day, 99 to 96.80. I mean, huge red candles on this chart. This market can absolutely go to hell. Everything. I'm not talking about sector. Yeah, right now we got a sector rotation. Sure, they're putting money in big stocks, but guess what? I mean, guess who holds more of United States bonds than anybody else as far as companies? Well, it's Apple. Apple has a ton of same treasury bonds that fucking Silicon Valley Bank had. And nobody's talking about it. Actually, everybody is buying Apple because it's the secure play, right? Apple's got a ton of cash on the balance sheet. Sure, we understand it. All wonderful. But, I mean, all of, these short-term bonds that if the dollar goes lower, okay, they're going to get mispriced. And if people really start marking these bonds for what they're going to be worth, if the dollar drops 20, 30%, it's going to be over, guys. We're that close. I mean, it is scary. We're that close to something happening that the world has never seen ever before. And the fact that nobody's talking about it is absolutely shocking. And the fact that some of the traders are focusing on this when we're looking at the S&P 500, they're like, oh, Leo, well, I mean, this looks like we got the next leg higher. Hey, Leo, we can break the fuck out and move higher here. Guys, are you out of your fucking mind, okay? Got a black candle right here, black candle right here. Today, on March the 30th, we're getting the same fashion black candle. And once that form is completed, okay, guys, you don't have to be a fucking rocket scientist to figure this out, what happens after a black candle that has similar formation. 1, 2, 3, 4 days lower. 1, 2, 3, 4, 5 days lower. Okay, we're on the verge of getting 4 or 5 days lower here. I mean, you don't have to look at anything else to figure that shit out. And it is a similar formation on S&P that I have just shown you on the dollar chart. So this is shoulder 1, this is your topping formation, this is your shoulder 2. Guys, this market is about to collapse the fuck out. Don't be shocked if like next 2 weeks you look at this chart and we're like at 3,500. You'll be like, Leo, how the fuck? We were just at 4,000. We're about to hit 4,100. I thought we were going higher. And then 2 weeks from now, you're sitting here like, holy fuck. How did we drop to 3,500? Okay, how we dropped to 3,500? Studying the black candles in the chart's divergence course of 13 market moves. Don't miss huge opportunities like this. I've stressed in the last few videos, the timing is here. Don't be fooled by these low volume days. Look, every day we move higher. What do you see here? The volume keeps dropping off. it's dropping off in the relation to the prior day. Okay, you have all buying volume is dropping off while the price action moves higher. It is a basic case of a divergency in the market, okay, which often leads to some strong, big size red candles and move expansion to the downside in the market. So trade it with 13 market moves. What's happening in the world is absolutely fucking scary, but within that lies a huge opportunity to someone who's paying attention to the charts and what the fuck is going on. So let's roll. Trade it with 13 market moves.